for those of you who joined or those of you who were on, we were just talking to Claire about why she wrote her amazing book, which all of you hopefully have a signed copy of. And Claire just informed us they're actually running out, so you may have a collector's edition. But Claire, I'll let you introduce yourself, but just somebody that's been an incredible advisor and mentor and investor to so many companies along the way, not just during her time at Stripe, but also at Google, and somebody that I was lucky to get to know randomly and got a cameo in the book.
Jeff is in the book. Hi.
And just has been somebody that's spoken a few of our founder events and been awesome. And we just really, Jen and I both read the book and were blown away about how detailed, how prescriptive it was, and how many, common things it touches on that all of us deal with every day when we're trying to build these companies. And you've helped build two of the great ones in Silicon Valley. And so maybe we could just start with, Claire, a little bit of your background and then sort of fast forward to why you wrote this book, because I have to imagine this was not a small undertaking.
Yeah, sure. Well, my background, I kind of think of it in 3 decades. Like my first decade out of college was pretty random. I actually did a lot of different things. But I think the notable thing when I think about founders is I did not pursue out of college a standard job. I went and tried to get a job on a political campaign because I was really interested in politics and government. And I think political campaigns actually, now that I've been in startups, are very similar. It's very scrappy, very entrepreneurial, very raising money all the time, it feels like. And it was good training. Working on political campaigns in my early career, I think, and then combining it with, I thought I was going to go to law school. I ended up in business school, but I worked in a kind of a startup consulting firm after that. And that combination was pretty helpful for the next decade, which was Google. I was at Google for almost 11 years. And that, if I divided that time into thirds, just to try to simplify it, I'd say I had very operational roles, partnering with product and eng on new products, integrating acquisitions, a lot of support stuff, which I think really matters that people don't talk about. How do you scale that? Google obviously has millions of customers, so you have to figure out how to do support quite differently. And then a sales era. I was a revenue leader. I ran all of mid-market globally for Google AdWords at one point. And so it's now I look back and having an $11 billion quota is something that I'm proud of, but not something that you personally can have a lot of control over the next billion. It's one of these things you have to think about to get your head around. And then in the back third of my career at Google was more, a little more intentional by me to try to expand into more generalist leadership opportunities. So I moved over into kind of a product GM role, which was unusual for Google, but it was a long story. But that was great because I got the chance to lead product and engineering and see the other side of things, which I think built some empathy in me, and then ended up in kind of a COO role actually on self-driving cars, like very close to, there was sort of a technical founder, if you will, and I was running product for them, but also, BD and industrial design, but also building the operating structures for the team and running the operations, which is really just testing self-driving cars at the time, but and doing partnerships and stuff like that. But point is, I had started to have conversations with companies about maybe COO roles outside of Google. I'd started to despair that I wasn't going to find one that was just like right, and we can talk about that. But I met Patrick Collison for a breakfast, very Silicon Valley story, and we went like 2 hours long over and couldn't stop talking. But that was actually the beginning of what was, I guess, 5 or 6 months of conversations and mutual diligence and recruiting and them figuring out what they wanted and me figuring out. I had just decided to commit another year to Google, so it was kind of tricky for me. And then, so yeah, I walked into Stripe in the fall of 2014 when it was about 160 people and was the COO until like May or June of 21. And then people think I'm like retired. I still work at Stripe. Actually, I still am an employee of Stripe. I work about 3 days a week as a corporate advisor and officer, whatever that means. But I get to do, I have more flexibility. But this book came about because before I was still COO, Patrick and John had just become really convinced that there was not a tactical enough guide, well, to what they'd had to do, right? They founded a company when they were teenagers and sold it. And then they founded Stripe. And they were looking for company building stuff and manager stuff. Like, how do you be a good, because I think being a good manager is actually pretty knowable, but all of the stuff happens behind closed doors. So how do you learn it, right? And so they wanted this book for themselves, and they thought that I was someone that could write it. And I initially was not. I was like, I have a job. but as founders have powerful reality distortion, Patrick convinced me I could do it in my spare time. And I think, I guess one of the silver linings, I'll end with this, of the pandemic is I did have more time, right? I wasn't traveling anymore. I wasn't out. And so actually, as my role was transitioning, I was able to amp up working on the book, and I really didn't have a lot of other distractions. And so there you go. Maybe it's a pandemic baby.
Awesome. I love it. Well, we're grateful you did.
Like a pandemic puppy.
Yeah. One question for you, 160 people is actually pretty early for founders to realize they want to bring in somebody to help them build a company. What do you think? And I'm sure this was part of your line of questioning at the time. What do you think drove that for them and kind of drove the fit with you? Because I know for a lot of folks on this Zoom, they're at that stage, maybe, or they're even larger, or they're smaller and they're not quite there yet. But that conversation around bringing somebody on, it's a hard thing to pull off and make it work as well as you guys did. And could you just share a little bit of context there?
Yeah. And I think that's, now that I really reflect on it, Jeff, it absolutely was earlier than I think you'd expect. I mean, I was at Google working with Cheryl when Cheryl went to Facebook, and I'm pretty sure Facebook was about 800 when she took that role. And that kind of makes more sense intellectually to me. And the companies that I was talking to that were in sort of growth phase other than Stripe, I'm not going to name them, but they were more in that phase, meaning, 600 to 1,000, 1,000 to 1,500, they were dealing with scale in a very real way. Whereas Stripe, I think, was a combination of a few things. One, once I got in, I did a sort of tops down, bottoms up assessment of all the inputs and outputs. So inbound leads for sales, what we had, obviously compliance requirements, we had customer demand, support requirements, and Stripe was actually pretty underbuilt. So if you actually did the math, which I did do after I joined, should have been around 500 people.
Oh, wow.
So we ended that year, 2014, at 183, not that I'm counting. And and we hadn't scaled recruiting. Everything was starting to bottleneck. And I think that the investors, and this is where your investors are your friend, the board and the board advisors were putting appropriate pressure on the founders to sort of grow and kind of embrace that they had product market fit, and that they had to think, operate with more process, honestly, and more. And so a lot of what I realized, and that pressure, by the way, was mostly on go-to-market. That's where we were really bottlenecking support, go-to-market, sort of customer stuff. But as the conversations progressed between us, and they were kind of torn, they were like, do we just hire a head of sales right now, which I think is actually a more normal for that phase thing you might be doing, right? Or do we want to go? And this is where the Collisons, they're very ambitious guys. They're going for the brass ring. They're like, well, what if we can get someone who has more than that? Right. And I think that's what I ended up in the process. They met candidates to be head of sales. They talked to me about it. I said, no, I've done that. I can do it, but I'm not going to take a job with 100. At the time, it was 80 people. I was like, I'm not going to come to an 80-person company to be the head of sales. I was running at one point a 2,300 person sales team. Right. And so you're just not having the right conversation. Right. But what was I interested in? I was interested in, being at the head table of a company that I thought had potential. I was interested in learning some new things, having some more scope and responsibility as an executive. And I said that back to them. And that's when they really came back and said, well, maybe we could do a COO thing, but I think it was unusual. I think I had a higher risk appetite than your average bear, which has been true of my career. And I think they, over the course of their conversations, Jeff, the business was definitely putting up the numbers that could support, like, intellectually, I was like, okay, even we should be bigger, because the revenue was meaningful, actually. And so were the costs. But anyway, so I think that was the moment. But I would agree with where I think you're going, which is it was early. I think it'd be hard. It's hard for a company of that size, if you're really serious about a very experienced executive. It's hard to attract those candidates. I call it in my book, I think, the uncanny valley. You're like, you're going to need it, maybe. By the way, we can talk about COO. I don't think you automatically need one, but you're going to want some scale experience in your executive team, but you can't quite get the conversations with the right people. And so what you have to figure out is, how do I bridge? And we can, happy to follow up on that. And I think that's hard, but I think it's a combination of things that you can do.
Claire, just to pull on that thread a little bit, I see some of the founders on the phone, on the Zoom, and who've contemplated, like, bringing somebody in, a senior executive, and somebody out of, quote, big tech, with a lot of trepidation about doing that, and concern about the transferability of skill or just experience. Like, how do you go from a Google and an $11 billion quota and 2,300 people on that to 100, like, can you talk a little bit about that, and maybe speak to, as some of these founders are trying to build out their executive teams, how do they think about pulling somebody over from one of the big tech companies who hasn't been,
I think
160-person company?
I mean, Jen, you're being, constructive here. I think there's a lot of organ rejection if you kind of grab the wrong person out of, whether it's big tech or any company, who hasn't been a builder. And so the conversation I've had with a few people is, like, taking, whether it's Facebook or Google or I don't care, taking that out of the equation, and you just really understand someone's background, right? That's really important. I would argue people who joined Google before, say, 2006, 2007 is a very different class of people. I joined in 2004. Before the IPO. I joined Google when it was 1,800 people, which, by the way, if you looked at my background, was the biggest place I'd ever worked. So I thought Google was giant when I joined, which is really funny when you think about that. But I was like, this place is ridiculous, like bureaucracy, whatever. It was crazy. It was so chaotic. But anyway, and when I left, Google was almost 60,000. So the people who joined in that back half of those 10 and a half years are really different. And they were, I felt it in my colleagues at Google. I was like, wow, you guys have never taken out the trash. Like, come on. When I joined Stripe, I was my own admin, which is fine. I had no issue. I did all my own calendar and planned every meeting myself. And I don't think everyone coming out of my role would be comfortable doing that. So you had to really think about my background. And this was actually true. I'll just say this for Stripe. Some of our best early hires, we had this team called BizOps that we kind of used like a Swiss Army knife generalist. They all had a background, I mean, pretty much to a person, that had some consulting or banking type training, right? Like maybe right out of undergrad, they got a couple years at a Bain or wherever. And then they also had done something really interesting and entrepreneurial. So either joined a startup, a couple people had founded companies. And so that combination of classic training with entrepreneurial builder scrap is really gold. And I think that's true for this role. So I would argue, I think Gokul just had a tweet thread about how he sees so many companies fall in this trap of attracting this like executive who's just going to be a fish out of water. And you really want to test that, and you want to wait until it's the right time to bring someone. Like, you just don't have all the infrastructure internally, and they're not going to add a lot of value unless they're just magical and figure it out. But better to get someone who can give you a few years of building.
Yes.
Or an up and comer who has demonstrated some of that, right? And they happen to have been in a big tech, but also have been in a more entrepreneurial role.
Yeah. And the point is to really get to the essence of that particular human. And that operator and
Yeah.
that executive and, you know, how do they exist within the walls and how do they operate?
Right.
You
And
know,
like,
and
what do they do all day and what
yeah,
will they do all day? And
exactly. And to one of your primary points in the early, you know, chapters of the book, I love the notion around self-awareness and you showing up as a leader and being able to be the leader, the operator, the manager. And we talked a little bit about the difference between those two things.
yeah,
That you are all starts by being self-aware. And so would love you to speak a little bit to that. And also so everybody, you know, here today can think about kind of pushing on that as they assess and interview executives, and figure out the composition of their own teams.
yeah. And I have a chapter that's about sort of my personal operating principles that I've developed, and you've just named a couple of them we'll talk about. But the first one, and by far the most important one, Stripe's operating principle, users first, is our first one and our most important one. But mine personally is build self-awareness to build mutual awareness. And I think too many leaders and managers start with a very fair assumption, but I believe it's wrong, which is that, oh, it's about the team. It's all about the org, it's about the team. And I'm like, actually, it's about you. And if you don't understand what you're great at, and by the way, your strengths are often hard to figure out because they're like breathing. What are you great at? What are you not so great at? What do you need to complement yourself? What are your blind spots? Because what you're trying to build is a portfolio of talent around you. And if you don't understand if you think of it as a puzzle and you're missing a quadrant of the puzzle, you know, you're not going to finish the puzzle. And so you really need to, and I talk in the book at some length about how do you develop that self-awareness, obviously seeking feedback constantly from people who I think are going to give it to you openly is critical. There's also a bunch of assessments you can take. Patrick got frustrated. I mean, I made everyone at Stripe. We went through, they were like a bunch of guinea pigs, the Stripe leadership team. We took everything, but it was useful because Patrick would complain and say, these feel like horoscopes. And I was like, all right, maybe they're a little horoscopy. So what I'm talking about is whether it's Myers-Briggs, Insights Discovery, the Enneagram, DISC, there's a lot, but what it does is start a framework for you that you share as a group and a conversation about, hey, I do see that in you. Like you do show up that way sometimes, right? And a lot of them are just, if you think of two axes, a vertical and a horizontal axis of, are you more task or person oriented? Are you more extroverted or introverted? Plot yourself and then talk about it. Like, what does that mean you default to? So when there's a crisis, you look at a leadership team and you can see people go to under stress. People go to their default positions. And I mean, I am not, by the way, the first person who says, give me 8 million points of data as my default position. But I will tell you right now, if I don't have a team member who does that, I'm in trouble. Because I'm starting to problem solve. I'm like, okay, what are the constraints? I'm starting to think about action. Someone's like, hey, we don't even have all the data, sister. Like, come on. But you need that around you. And I've learned that over my career. I mean, actually, some of the people that I really didn't love interviewing because we didn't connect as easily that I hired for my leadership teams ended up being my best hires. They were the biggest pain in the ass to close them because they were these data, analytical, like, I don't trust anything you're telling me, very engineer. I'm going to be like, I love engineers, and those ended up being some of my best hires. But if I had hired them based on chemistry in the interview, I wouldn't have hired them actually. And I think that learning that lesson is pretty important. And that's true, especially for building a leadership team, right? And then this is where the mutual awareness comes in, actually do the work together occasionally. Right. Look at, take some assessment, talk about it, look at results, give each other feedback, talk about, one of my favorite constructs is this, it's from the D School at Stanford. They have this thing, I like, I wish, I wonder. And you can take little Post-it notes and be like, here's what I like. So you're saying to someone like, Jen, here's what I like when you ask me that probing question. I wish you had told me the, agenda behind that question sometime, and then I wonder if next time you could blah, 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 right? But you just write these like little, building a culture of feedback, of making each other better. Early on is something I think we did pretty well at Stripe. I'd like to think I played a role in it. And it creates more of a team than what most teams are, which is working groups that happen to
Claire, can I ask a personal question on that topic?
Yeah.
So, we have come to believe that self-awareness is one of the most critical elements of being a great founder and CEO. On a personal level, how do you make time? How did you make time throughout your career for these kinds of things? Because one of the things that I find when I sit down with CEOs and we spend time together, we talk about that, but they're like, yeah, I'm trying to take my kids to school in the morning. I'm running a startup. I'm on email at 12 o'clock at night. How did you personally, and maybe even sharing some insights from Patrick and John, how did you guys build that into your leadership style and your personal capabilities? And how did you help your other team members do that? Because it's, everybody's running so hard when you're trying to build that 180 person company. Hard to take that time out to do that. And everybody wants to be self-aware. Everybody wants to be great at their job. How did you do it?
Yeah. I mean, I think that I've come to a philosophy, Jeff, that the book definitely pushes, which is, and I use Bill Walsh's book as a way to explain this, which is the title of the book is The Score Takes Care of Itself.
Great read, by the way, for those who haven't read it.
And I really believe that creating conditions for success will get you higher ROI. You will get more results. So I will preface what I'm about to say with, it seems like you're taking time that you don't have because you have to be doing the work. Mm-hmm. And in fact, taking that time is doing the work. But it's almost like that important urgent matrix, right? It is very important to do this. It is never urgent. And so if you do not carve out the time to do this work for yourself and with your team, you will pay a price. You will just not pay it tomorrow. You will, and that's a really, people intellectually I can say that. And then people are like, oh, well, then next week we'll do it, right? Next week. But so what I've learned to do is, I think, two things. One is say I'm going to have a day-long planning meeting with my team. I automatically allocate 25% of that to something related to this work that I'm describing. Okay. So maybe the first 2 hours or the first hour and a half. By the way, a lot of these assessments, these people who want to facilitate and coach you, whatever, they come in and they're like, I need 8 hours. You just say to them, no, you get 90 minutes. You get 2 hours. Or You know what I started to do? I just did the thing myself. Like, I was like, I'm not, because, you're smart, you're busy. You're not going to spend 8 hours looking at your personality assessment. That's ridiculous. But spending 90 minutes to 2 hours is actually a lot for a startup, like a lot. Mm-hmm. And it's really, I mean, Patrick and John can tell you, it's really worth it. Like the whole day, by the way, also goes better because everybody's like, oh, we're thinking at a meta level about how we interact and how we work and how we make decisions. And it turns out so-and-so's tendency when making a decision is this. And so, then you can call each other out and say, hey, Jeff, I think you're being a little red, like you're rushing to direct people or, whatever it is. Anyway, so I think it's really valuable. So I just make my team do it when I book time for anything in varying degrees. Sometimes it's just a check-in at the beginning of the meeting. It's a 30-minute thing. Sometimes it's 2 hours. So that's one. The other is I interviewed a bunch of leaders of different industries, including some people from tech, including Eric Wan, who founded Zoom. And Eric clearly had a coach who was like talking to him about building self-awareness. And he has a practice that I've sort of tried to employ myself, which is to take a few minutes every day and write down what are things I learned. Like what am I thinking about today that I could have done differently? Or what did I learn today? And Eric says, sometimes I write it down. Sometimes it's literally just sitting for 10 minutes and thinking. He's like, has made me a better leader. And what he's really getting at is what did I learn about myself? Like, what could I have done differently today? And I think introspection is underrated. Like, but carving out the time. It's like, until I realized that exercising regularly I made it just like, consider it part of my job. Like, I am not a good leader if I do not work out on a regular basis, I realized. Then I was like, not guilty about going and exercising. And I think it's the same thing about introspection. It is part of your job.
Well, I would encourage everybody, there is a lot of this, there's some structure and some frameworks and some content around this in the book. And it's, a lot of folks they didn't work at a Google, they didn't work at a Stripe, they haven't ever seen it in a programmatic way.
Yeah.
And if you haven't seen it or built it into your lifestyle, your point about exercise, it's hard to envision what that looks like.
It is. It is. No, you're right. And Google is rich with resources, very nice
Yeah,
margin.
yeah,
No, I would sometimes be like, why are we doing this program? And then look back and be like, you know what? That was a good program. I learned, and I learned how to cheat it and do it in 2 hours. But I think that I think I appreciate you saying that. I don't think people envision what this could be, and it is so important.
yeah.
It also completely informs where like a level of awareness that helps people hire and build out the team
Yes.
in a more robust way to
Yes.
create diversity of thought,
That's right.
diversity of personality, you know,
Yes.
of just strengths.
Yeah,
To
no, a lot of
create-
more mature companies have executives take assessments before they hire them, and they match it. And I did do that with our CFO hire. Whatever. Anyway, it is interesting because you have an intuition about someone. You're like, are you going to fill this gap in our portfolio, our team? And you kind of want to find out before you hire them if you're right that they will. It's not a crazy thing to do.
And I think we're going to go to the floor here in a couple minutes to take questions. But just one last one before we do that. Would love to hear you write about managing high performers. And I think in this particular moment in time, it's a very different market everybody's existing in. Budgets are not as plentiful. Compensation is coming down to more quasi normal levels versus over the past 24 months, I would say. But how do you think about that? Because retention is pretty important in terms of trying to get through this moment in time, always, but in particular right now, and would love to just hear a little bit about that.
Yeah, I mean, I think that, well, I think there's two things going on. One is recognizing a high performer. Not everybody has a framework or a way in their head to realize, wow, that person is a contributor at a higher level. And I think one easy founder thing is to decide, well, I can only hire those people, but it's very hard to identify them early. It's like, in the draft for a sport, like you get this intuition that this could be a top talent, but until they're actually in the pressure of being in a major sports league, so the point is, yeah, okay, theoretically you just want all top talent, but I'm talking like top 5%, top 10% max talent, is recognizing that they are, and thinking then differently, not just about things like compensation, which they're a lever, it's a vehicle, but like, how do I invest in these people? How do I give them stretch assignments? How do I tell them they're valued? Because I mean, I'm a subscriber not to the highest comp and the biggest benefits like perks. I mean, yes, have a good parental leave policy, but you do not need like laundry service, right? Whatever. What I believe is, Daniel Pink wrote about this. I mean, it's purpose. Do they feel like they're working on something that matters, that's important? It's mastery. Are they learning? Are they in an environment where they realize they're getting good, they're getting better, and they're getting invested in? And then it's autonomy. Are you starting to give people responsibility? I mean, the reason people go to younger companies, to startups, is because they're going to get more learning and responsibility. And that's why I did it. Like, I mean, it made my career. Like, I think, and so really embrace that as part of the program. But really the thing, I guess I would say, what my book is about is also a belief that you can be in a very high growth environment and still invest in some smart ways of operating, which are pretty simple, but pretty important for stability and scale, and in people in ways that you wouldn't think you could. But it goes back to, it's part of your job. And how are you going to retain people? By telling them they're important to you, and by them feeling like you're investing in them. And yeah, compensation can go along with that. But I think, I mean, like, I'm on the board of HubSpot, which I had known a little bit as a company, but they do not pay top dollar, and they have not through this whole period. And they are executing extremely well, and they retain a lot of great talent, and they have a really great culture of how they work together and how they have mutual respect and inclusion, and then recognition of accomplishment.
And a great female CEO in Yamini.
Yes. Yes.
Let's do a question, and Hani, maybe I'll go to Hani Goldstein. She asked a question which I know you touch on in your book, and I think is a really something we get a lot as boards. And so Hani, you want to jump in and ask your question?
Yeah, sure. First of all, I'll say we're Stripe customers for the last 6 years, I think, and grew all of our volume on the platform. So that's very helpful. We love your platform. It's super easy. And
that makes. Thank
yeah,
you.
cool.
That's great to hear. I can check this. I try to talk to a Stripe customer every day if I can.
You got, I'm sure you, I would guess a very high percentage of the companies
I
on
guess
here are
I have
Stripe
a few
customers.
here.
So that box is checked today.
Hey,
That's why
yeah,
this.
for
That's why
sure.
book events are part of my job, Jeff.
Yeah, I mean, but it's from the very first day, so it's nice to see how it was doing all the work when we were small and also as we scaled. So my question was about measuring and improving efficiency of employees. I think just in general, obviously remote is harder to be able to
Yes.
do all of these
Yes.
things when you're not in the office. And I would maybe would love to focus on the answer more on non-sales employees, non-CS, even like customer success, customer experience, all these things that don't necessarily have measuring your tickets and measuring your, your quota. So.
Yeah, I mean, I'll tell you, if I had the answer to this, I would have more than a book, right? Can you guys hear me?
Yep, we still got you.
Sorry, I just got like a weird notification about my AirPods. Anyway, so if I had the answers to this, I would have more than a book. But I'll talk about how we've thought about it. I saw some of this at Google, and I certainly spent a lot of time. There's probably the person who's most present as almost a co-author in my book is David Singleton, who I worked with at Google. He was actually my engineering. He worked for me when I ran a product, and then I brought him into Stripe as our CTO and head of engineering. But he's got the most content in the book aside from me. And there's a reason for that, which is I think like you need to hear, if you're talking about tech, high growth tech companies, you're going to hear from engineering. And the answer is it's really brutal because you cannot just look at code commits, right? Because they could be low quality, they could be small, they could not be high impact, right? You've got to really think about the combination of volume and quality and getting that right. And then also about developer velocity. If there's something that Stripe's probably invested in more than your average company, it's developer tools. Because if you think about it, we're a developer tools company, actually, we build APIs. But even with that in mind, and I talk in the book about some benchmarks of developer tooling investment being, maybe Stripe, it's like 8% of our engineering resources. The benchmark we looked at was about 4 to 5% of your engineering resources. But even with those investments, by the way, brutal as you're scaling, because basically whatever architecture you developed and stack is going to be wrong if you were a 200-person company and now Stripe is, in multiple locations around the world with over 7,000 people. And so what happens is the collaboration overhead and cost is real. And it's also not fun for teams. They don't love that friction either. So my answer is, how do you measure it? Is you have to have a combination of things that you agree. And I think it's important as an engineering or product leader to be pretty transparent about this and set expectations and say, we're going to look at, yes, things like the volume of code being committed. We're going to look at quality and our QA process and what that tells us. So we're not just looking for volume, we're looking for quality. We're going to look at surveys of you as developers. Where is friction? Where do you think you're losing velocity? And yeah, we're going to look at launches. Like we're going to look at our roadmap and what we planned, and you'll get better over time at planning these things. And like no, you never launch everything on time, but you have a plan. And why were you off the plan? And you're going to ask yourself that, and you're going to make, and it's not a dashboard. It's kind of an amalgamation of more objective and subjective metrics. But the key is that you're telling people you care about these things, you're going to measure them, and you're going to ask for feedback on them. Because I think, and by the way, you need to demonstrate to them when that collaboration overhead, right? So think about it. If you only have to collaborate with one other engineering team versus two other, like all of a sudden you get exponential growth in collaboration endpoints. If that's killing you, we want to hear it, and we will work to address it, whether that's with tooling, with actual rewrites of the stack. And I think separately, I talk about how I think it's the founder's role to tackle some things that are not popular with people's time, like tech debt or security. Because no one is going to raise their hand and say, hey, let's spend a quarter paying down tech debt. But if you aren't doing that and forcing it into your system, you're going to have a problem with velocity and customer experience, depending on your product. And I think that is like one thing Patrick really taught me is he's like a pretty paranoid guy, but he would be the first person to talk about the thing that nobody was thinking of investing in that really mattered to the long term of the company. And that would become our number one. Like we had a framework for priorities for Eng resources, and the number one was like existential threats that we're not talking about that need to be invested in. Sorry, that answer went all over the place.
No. And there's a lot on this in the book. Claire, maybe just going back to thinking about you have a section of the book where you talk about the difference between managing and leading.
Yeah.
And can you just talk about that? I thought it was really interesting. And one of the things that we've created a whole program around called Founders and Leaders, about helping founders migrate up into being great. It's hard, right? You start a company, your job day one is to do all the work. 2 years later, you've got 100 people that are doing a lot of the work and you're trying to be a leader. And can you just talk about that and how you and Patrick and John thought about that? And you write about that in the book. I want to emphasize as well.
Yeah, my principle is like, how do you, it's really important, even in one moment to the next, to distinguish between management and leadership. And I have this belief system, by the way, that, I mean, this is simplistic, but bear with me. People kind of grow up leaning one way or the other. More naturally a manager, which would be me, by the way. I'm very organized. I love, like, give me a goal. I will figure out how to get there. I will organize the people. I will track their progress. I will get that shit done. More naturally a manager, or more naturally inclined to be a leader. And leadership, by the way, for some people, for me, it can be very uncomfortable because you are setting a vision, you are demanding things that you don't even know are possible. And if you're a really good leader, you are making people a little uncomfortable. You're turning up the heat on them and you're saying, I want more, I want better, I want faster. And I see this place we need to be. And then you're not actually managing them always. Like, how do you get there? They've got to go figure that out. Right. And I think at Stripe, I mean, I was a pretty good leader at Google, but more of a manager. And that kind of worked for the scale that Google was. Like, I was just leading teams to achieve certain metrics often. Right. But then as I moved into product and eng, and then also as I went to Stripe, I realized I need to set the standards higher. Like, my job is actually as much to model what a high standard looks like as it is to manage people to achieve it, which is like less and less my job. And I think getting that balance and understanding in the moment, what am I trying to do? Lead and set the standard and the example and articulate the vision and put the right pressure on the system, which, by the way, goes, Jeff, with like, I'm going to say an unpopular thing and tell you, you need to spend the next 2 weeks paying down your tech debt. And everyone's like, nah, I don't. It's like making your kids eat vegetables, like, but no one else is going to do it. You have to lead. You have to lead people through it. So that's what I advocate. And I really think being self-aware, by the way, about which way do I lean, and what one of the most powerful things you can do as a leader is show up differently sometimes. And at Stripe, I'll believe most people would be like, oh, Claire's so empathetic. She understands how hard it is to actually get all this work done. She really helps us unblock. Like, but sometimes when I show up and I'm like, this isn't good enough, people are like, what? But they're really listening because it's different than how I normally show up. And I would really advocate that all of you think about how you flex on that continuum and how the people around you flex on that continuum. Is that what you were looking for, Jeff?
Yeah. And one of the things you talked about is, one of the hardest things about being a founder is you are trying to get people to go somewhere that they don't see.
They don't see it.
And they don't, and nobody else sees it. And we have this conversation a lot, and, you're sort of pushing them in a direction saying, we're going to go accomplish all these amazing things. And part of it as a founder is, you're probably not going to accomplish all those things, but you still have to get people to go there.
So I use this quote from Ron Heifetz and Marty Linsky, this is a good book, Adaptive Leadership. I would look at it, but they're great researchers on the subject of not technical problem solving, but really adaptive problem solving, which is like, you're never done, right? This is the infinite system kind of thing. Anyway, and the quote is, leadership is disappointing people at a rate they can absorb. And it's exactly, Jeff, I think what you articulated, which is you are setting this incredibly big vision and this high bar. And yeah, you may not get to all of it. And that's a little bit disappointing, but you probably will get higher than you thought. And the people will be like, oh my gosh, I followed that person up that mountain. And, and I really think that's uncomfortable to do. I really admire it in people. I've learned, I remember when I somehow found myself telling our Stripe support team that we were going to have 24/7 multi-channel support in 7 languages. Like, I was like, I have no idea how we're going to do this, but we're like, we are going to somehow get from our 43 people today to a place where we are there for our customers. But I had no choice. We had to put a big, hairy goal on the table.
And Claire, we do have a couple questions from the audience as well, but I did just want to touch on, I love the part, and I think David had a lot to do, but the stripes unblocking process.
Yes.
Because when there is attempted collaboration, and then what? If that doesn't work. So if you could speak to that quickly, then we'll get to that.
There's a bunch of good sidebars in the book. This is one, again, you're right. David is a big contributor in the book, which is our go/unblock process, which is, I think that there's a high achieving organization. Sometimes this is a stripe, your strength is your weakness. So high achieving organization, one, doesn't like to admit failure and doesn't like to ask for help. And David had a real campaign for a while on escalating when you are hitting, we just talked about this, friction or you're blocked is not weakness. It is not failing. It is how to make the system better. And so we actually articulated, if you're to have 2 teams who have competing priorities, you're maybe interdependent, and there's a disagreement about who is going to do what when, which happens all the time, especially with engineering and product interdependency. I want you to go through this process. And it talks about, it's very simple, by the way, this is not a heavy thing. It should not be a heavy thing, but it's trying to give people, one of my other values, which isn't in there, but is make things that are implicit much more explicit, which is, okay, the first thing you do is everybody should be talking to the management layer who's imposed, like if you're just like a, I don't know, product manager and you're like, I can't, you should be talking to your boss, and the person on the other side should be, and the 4 of you should get together and say, hi, did we create an immovable object problem here? Like no one's incentives are aligned. What are we going to do about it? And then it gets into a little more formal. Let's write up both perspectives on what we could do now to unblock. And we don't agree. That happens. And then you are very clear about who the decision maker is, who says, and it's whoever the most common node is over both, because eventually in an org, whoever, Jane's manager and John's manager, eventually go up to one person. That one person is the person who will read those write-ups and say, this is what you do.
I think the other thing about making it explicit is it also normalizes it, right? It's like, we were having this conversation at a dinner last night and talking about all these challenges that people are having. And I'm like, guys, everybody has those challenges.
Yes.
Like we're not some super fucked up company that is the first company ever to deal with these issues. And so putting them out there on the table, and even what I loved about the way you do it in your book is putting it out as a framework for how you deal with these regular issues.
Regular problems.
These are not random things that we're the first company in history to deal with.
No, I used to have a boss that I worked for. I'd come to him with a problem and he'd say, wow, okay. And so has no one ever faced this before in the history of problems? And I was like, oh, Tom. But he was right. I hadn't talked to anybody. I hadn't looked for ideas. I couldn't come with a solution. And everybody, you look under the rock of any company, it's a freaking lot of worms, right? And the little pill bugs and stuff. And you got to figure out a way to build that into how you work.
So one of the questions Sim from Vedantu asked, but he says he have a sore throat, so he's not going to ask it, is what is a reasonable time frame for evaluating the output of a C exec, or let's say just key hires, and what factors should be considered? So one of the things that, as you know, is a real challenge is you spend all this money and time and effort recruiting people into your organization. For CEOs, it's a huge amount of their time. With 50% hit rate, at best.
Yeah, which is really bad news, but true.
Yeah.
So I've had a lot of founder conversations, Jeff, on exactly this. And by the time they come to me, and they describe what because they're looking for an intuition, and they have it, they know. They're like, because the answer is I can't give you a dashboard or a template and say, okay, in 90 days, these things should have happened. And in, 110 days, these things should have happened. But if you're starting to suspect that there is an output problem, an impact problem, you are right. There is. And the thing about an exec is you can come to them and say, hey, maybe we didn't. And by the way, here's the mistake I think that people make, which is, yeah, they're an exec and they've done a lot before, and maybe it's intimidating to manage them. Who cares? Like, the best thing that Patrick and I did is, after my first month or so, I wrote up for him 5 or 6 things that I thought could be priorities for me to like accomplish in the next few months or whatever. And then I said to him, and by the way, I probably will get 3 done if we're lucky. And so you and I better agree on what those top 3 are.
Wow.
And I think 6 months later, I think that saved my ass, because one of the things that fell below the line was actually, we've been talking about this, fixing our support operations. And it was in a terrible state, but we also had no recruiting and no sales. Like, I had to do other, and we had an international rollout happening that was not on the rails. And so we jointly we put it below the line a little bit. I mean, I wasn't gonna ignore it, but I wasn't gonna put my full effort, and the support team blew up. I said to him, I said, this may explode. We may have to fire someone, which we did. I said, I predict this thing is a bomb that is ticking. And it was. And because we'd had that conversation, he was like, wow, you were right. I was like, yeah, but I also didn't fix it. And now we have a bigger problem, but that was a decision we made together.
But that's such an interesting insight, because you have one of the great companies of our generation, I would argue the great founders of our generation, and you, one of the great operating execs, and you still said, I'm going to get 60% of the things done on this list. And you guys worked through it. Yeah. I think that's super powerful that you put it out there right up front, and you kind of work through it as a
group. How I manage I always want to agree on what are your priorities and goals, including from day one. Let's agree on those things. The other thing I would say that we found is a really big indicator of a no-op on an exec hire was that they did not attract any new talent into the company, let's say within the first 3 months. So not the first month, not the second month, but like, people are not following them, because great leaders build followership, but also it means they understand the company, they're selling the vision, they see what is needed, and they're bringing in that was probably our number one indicator that we had a problem. And again, we were a little bit more in growth mode, but even not in a full growth mode, you'd want a leader to agitate and say, hey, I think we need a head of X, or I'm surprised we haven't cracked this thing. I know a person, and if they're not talking that way after a few months, what are they looking at? Like, they should be bringing observations about gaps and talent.
Yep.
So.
All right. We have another question here from Irina from Neon. About remote, office, hybrid, our current existing structures of work. What's the next?
A whole nother book.
5-year trend for tech scale-ups operating internationally, and what setup will win?
Yeah, so I love that someone's going to win in this. I'll tell you that I had to go back and edit the book, and I was like, oh, because I had a lot of remote content. Stripe actually has always had remote employees, part of the talent strategy early on, which was really, we couldn't afford to hire engineers in San Francisco or find ones that understood what Stripe was going to be. And so Patrick would hunt talent down and just like hire them wherever we had one guy who worked in this remote island off of Canada, but it was fine. He was very talented anyway. So we always
Jen's Canadian too. So we love Canadians at GGV.
Exactly. 15 to 20% of Stripe's employees before the pandemic were remote, which especially on the tech side. But my answer to this is no one's going to win. Just a reminder, when you get to any scale, you have a distributed workforce. Mm-hmm. Maybe they're going into an office, maybe they're not. But if you're the manager, the leader, the founder, they're not with you. Like, I've been leading teams that were distributed around the world for 25 years because I've worked at places that have had, when I walked into Stripe, I had however many, let's say 12 direct reports. Half of them were in other countries already. We were going international quite quickly, right? And so number one is, this is reality. So the winner is going to be some combination of the things. I think the question is really embedded in, is there everybody has to go back to the office, or we all are going to be hybrid, or we all going to be distributed? And my answer is, be really intentional about what you choose, and then build your systems, your processes, your tools, your culture around making that thing that you chose successful.
Mm-hmm.
Okay. I mean, number one, like, do not think it's going to organically, people do not organically collaborate well, especially across time zones. And time zones are not going away. And so even if and so you have to think about, like, how do I make information available asynchronously? How do I have tooling that can show me the history of what happened so that people can go and do their work? Because again, go back to people being able to operate independently. How do I build into the other question, systems of understanding our velocity? And how do I communicate expectations and values about how we work together in this environment, whichever environment you chose? I do think, and this is kind of goes to Sam Altman's comments, I think earlier this week, younger companies or companies that are hiring a lot of people with less work experience do need more in-person time.
Mm-hmm.
And I say in the book, yes, I ran distributed teams for the last 25 years. One of my ways of doing it is making them be in person at least once a quarter. Because I think if you can get tightly aligned, then you can loosely couple and run. But if you can't be together, it's hard to tightly align. So what you need to figure out is, what's the cadence of in-person planning, deciding, dividing, and then let them run. But especially for certain, when you're figuring out the thing, like what is the product, how you're going to need more in-person time. And then build the budget in for that travel, and make it happen.
And also to build that trust, right? You need a little bit of trust.
Relationships.
Got to spend a little time together to have that trust.
100%.
But it is funny. We hosted this dinner last night, and we were having a conversation. I said, guys, in 2019, it wasn't like everybody's like, oh my God, being in office is magical. Like, it's everybody's, we got to go back to that. It wasn't like epic.
No.
And so, but in today's world, and we've had companies like HashiCorp that have been distributed since day one.
Yeah.
But they're very intentional about the work model.
They're very intentional about how they get their work done.
Exactly.
And that's what wins, guys. Culture eats strategy for breakfast. Like, this is what wins: how you get the work done, and what you agree on as a collective, and build those norms. That's what is really going to matter.
What can I ask? We've only got about 5 minutes left, Claire. What you've also worked with and mentored a lot of startups. You talk to a lot of founders. What are some of the common things that you look for in companies that you think can be successful? You have so much insight on organization and teams, and some of it we always attribute to, like, oh, it's the genius of the product, but we both know that in many cases that's not what wins. What are some of the things that you look for, and what advice would you share for the folks? Most of the folks here are running companies that are probably 25 to 200 people. What would you say? These are the things I look for, and these are the things you can, obviously you shared a lot of things today that people can build into their companies, but what are some of the things you look for when you meet somebody?
Well, we talked about, the main one is self-awareness, and honestly, a learning orientation, and a certain amount of confidence and humility, right? Which is a combination that's not always easy, which is, I believe I can do this thing, and I am persistently going to pursue it. But I will ask for help. I will ask for information. I will activate my network. I will ask for feedback. I'm not set in my belief system completely. It's like, sort of like, you have to have a very strong belief, right? It's like a strong opinion that's loosely held. Like, I think that you're looking for that, and you're looking for this orientation toward learning. Most of all, I think you asked me, what do I end up talking to people about? I think it's that right around, like, product market fit, 40, 50 people, you really have to think, okay, it's one muscle to get product market fit. That's hard. Like, building the product, testing with users, iterating, figuring out the opportunity, getting a team behind that, and marching through what I think probably feels like wilderness sometimes to get there, right, is an amazing skill set. And guess what? It's not the same as building a company. And then all of a sudden you have to turn from that really hard thing to another different really hard thing, which is building a company, which is not the same as building a product. And that is my operating structures, which is kind of chapter 2, is really about, what do you start putting in? And I would argue maybe it's right around this phase, right, that will give you some levers I'm not talking heavy process. I'm not talking heavy, but you're starting to document things like, what do we believe in? What are we going to be intentional about and how we work, our values, our operating principles, our long-term goals? How do
Yeah.
you onboard people into a culture and a system? The other thing that I think is really important is you're going to be going through a lot of chaos and ambiguity as you go from getting product market fit to being a thing, right? And building some simple operating structures that replicate up and down the system. And this is what OKRs did for Google. Everyone talks about OKRs. Yeah, they're goals, but actually they were an organizing principle from the leadership team all the way down to the individual that everybody shared in common and really took seriously. And that is why that thing worked, because it could go up and down the stack of the system. You're looking for things like that you build into. Some of it is communication cadence. This is how we use our all hands meeting. This is where you find this information. Some of it is, this is how we review progress. But like some things that are touchstones that you create, this is more of a manager than a leader thing. It's like, I'm going to create some stability in that we're going to do some of the same things. There's a reason that rituals and traditions exist in cultures and religions and families. Create rituals and traditions in your company earlier than you think, because they will create some solid ground within which you will have a lot of chaos and challenge. And I really can't, I mean, and what they are, by the way, secret, doesn't matter that much, but ideally you have them and that they can go up and down the system. That's my parting advice.
I love it.
And the book has examples of these. They're not rocket science. They're not, and you, but they really form cohesion and stability.
Love it. Well, Claire, this has been great. Thank you for spending time with us. I appreciate it. We appreciate I don't know how many thousands of hours it took to write the book, but it is amazing. And we're thrilled that everybody here has a copy. And
well, thank you for having me and buying those copies and for all of your attention and great questions. And you're doing the important stuff. I'm glad if I can give you some useful advice, but
well, the team, the
really
founders are doing the important stuff. We just give them the money and hopefully some good advice, but thank you
I'm talking to all of you. Hey,
thank you for the time. Yeah, we appreciate it.
Claire.
Thank
Really,
you.
and thank you to everybody for dialing in.
Yeah, great to
All right.
see all of you on
Have a great rest of your day.
Bye, you too.